All right, what do you make of the action in the pre-market? Clearly, investors have some enthusiasm about the court saying that the reciprocal tariffs are illegal, but we know the Trump administration is going to appeal. We also know that the president, according to a Goldman note and some other reports, has some other options to reimpose tariffs to at least a certain degree, maybe not the ones that are at the same level of the reciprocal tariffs, but he certainly does have other options.
Yeah, well, we'd have to say, Frank, first off, the natural reaction that we're seeing today makes all the sense in the world as trading desks look at the near-term implications of this. And I think that the comments elsewhere around the market related to the potential for an argument being given by the administration to reverse these court decisions is to be expected. Volatility, again, is what we would expect is partly what we deal with this year as issues around trade and fair trade practices, as well as the debt that our government carries and what can be done about reducing costs or what the path is to reducing costs eventually related to budgets. All of this remains in place on the landscape. But this is certainly a nice rally, and we're certainly glad to see that, on a year-to-date basis, it's been plenty of turbulence. But if we look from the bottom of where the market hit on April 8th, we're doing pretty good with 4 out of 5 of our favorite sectors leading, including information technology, consumer discretionary, industrials, and communication services.
Nice rally, but I think people are trying to get some nice gains off of it. So I think the question for today is, where do you put money to work with the idea that this has been ruled illegal, even though the administration is going to appeal it, that the trade policy might be softening, I guess some people would say, and there might not be so many tariffs or tariffs at least at the same level? Where do you put money to work at today with that in mind?
Well, I think it's very important to consider the objectives of the investor, whether it's an institution or whether it is a private investor. Short-term investors, this is a play here. You ride this up to your target points, and you take some profits, perhaps. On the other hand, for intermediate to long-term investors,
what sectors, John?
Certainly don't want to sell.
I understand the strategy, but
sectors, again,
industrials,
technology,
where you look?
Communication services, consumer discretionary, industrials, and financials, which remain our favorites here. You want to stick with quality. You can diversify somewhat into small and mid caps, but there's still considerable risk there as we move forward in this process of a repositioning of global trade.
When you're talking about considerable risk, I know you're focused on global trade. We all are today because of the court ruling, but also what about the spending bill? Is that also something that you count as risk, and the idea that we might continue to see yields move higher in the bond market in response to this bill moving through Congress? It's already passed the House very narrowly, but now moving to the Senate.
Yeah, I think most certainly the risk remains there related to the budgets and the argument that's going to continue within that over the course of the next few weeks, at least. What we would expect is that when the 10-year moves to higher yields, that when you see bond buyers beginning to come in. You've already seen a move towards stabilization of the bond market by Japan. That looks good. And you've got to consider what are the alternatives to U.S. debt, considering both policies in other governments around the world, whether socialistic or
John, we got to go. But when you're talking about alternatives to U.S. debt, what are you talking about? Is it Japanese debt? Is it European debt? What do you like?
I think you stick with U.S. debt, and you particularly consider corporate debt.